So traders, in today's market update, I want to talk to you about why the weekly trend is the most important trend to you when you are trading the markets, and how it's going to remove a lot of the noise and give you much more clearer thinking about what's going on and what's likely to come moving forward. Let's go straight into it. Don't place a trade based on what you'll see in this video, because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, so the theme of today is why the weekly chart is the most important time frame to focus on when you're looking and trading these markets. Now, this is if you are looking to get into something and you're looking to capitalize on a few day move, maybe even a few weeks up to a few months type of move, right? Like a trading opportunity there. And why the weekly charts? Use the weekly charts when looking at the trend analysis to give you a good gauge on what is going on in the markets right now. So if we have a look at what the markets are doing right now, we can go to, say, even the Russell. So the Russell, whenever I'm looking at my weekly chart, I like to use a 24 moving average. And the big thing that I see when I'm looking at markets is I like to look at the trend analysis of that to tell me what's going on and what could be coming soon. So if I'm looking at, say, the Russell, I can see the Russell had this low through here. So that was the low. Then we had another higher low here. And then now we've had another higher low through here. And we've had a small little high low here. So you can see that last significant low was around the just above the 190, 194, 195 level. That's that low level through there. So that's the most important trend to us, right? So as long as it stays above here, now if the Russell does start to break below this IWM starts to break below 190, well then we know the trend has changed. So the most important part to the trend is looking at this level here. And one thing that for me in my personal trading for the last 20 years, we can get really sort of entrenched into the media and all that sort of stuff about what's happened with these markets. But the most important part to us as a trader is what is actually the actual what's really going on, and so therefore we can make some good decisions from here. Like look at the S&P 500. If I take everything off the screen with the S&P 500 and we look at this here, one of the hardest things about trading the markets is I guess one of the hardest things about trading the markets is not what's the word for it? Is going based off what you think, right? What you think is going to happen instead of what the market is doing. And I've seen so many times when we get a nice good sell off, but the trend is still up, right? And the trend is your friend until the end. We all know that saying, but what does that actually mean? Especially on the weekly charts. Well, if we have a look at the weekly chart, we had this low, we had this higher low, a small little higher low, higher low, higher low. So the low through here is the 5,000. So with me and my personal trading, and one thing I want to encourage you to do is that if you're looking at, say, the daily charts, you're looking at the daily charts to look to get in today, maybe hold it for a couple of days, maybe a week or two, right? That's what I do with my trading. The weekly chart is going to help you determine what is this. Is this just a little bit of profit taking, a little bit of a counter trend, a little bit of a pullback before we continue up, or is something else changing? And what we need to do is we need to just simply take what the market is actually doing right in front of us. So the weekly chart for me is always that, because if we go up and we start to come down through here, look at that through there, dedicate a higher low. So as we're coming down through here right now, if we are saying anything other than the trend is still up, then that's what the trend is doing that. And when the trend does change, when an upward trend is higher lows, right? So higher lows, higher lows, higher lows. So the trend is your friend until the end. So as long as it's making higher lows, the trend is your friend until the end, right? Well, this is a low. The market is still making these higher lows. Therefore, this could just be another higher low through here. And so therefore, when looking at the markets, for me personally, I'm always utilizing this. And the reason why is because there's so many times that when the market does do this, and then a month later, it's back up to all-time new highs, and you're like scratching your head like, how did that, what? And so for me personally, we're still making these higher lows through here. If we do somehow come down and break the low, we're no longer making higher lows. Higher low, higher low, higher low, and higher low, right? So we're no longer making these. If we're no longer making higher lows, that's when things change, right? So if you look back here at the COVID, that was that last significant low, right? Right through there. Look what happened. As soon as we actually started to break below the low, higher lows all the way up, then guess what? Things changed. So this is one simple thing we can utilize to say, is this just a counter trend? Or is it something more than that? Right now on the S&P 500, it's just a counter trend, right? It's a bit of a profit taking. That's all it really is. We had such a massive move. We're just getting a little bit of profit taking. So we're probably likely to get a really, really, really strong bounce out of this because we're still making higher lows out of these markets. And that's what I do. And this is what I do, guys, to remove my emotions as well too, because it allows me to see things really, really, really clearly. Even for the Nasdaq. The Nasdaq low was what? Right here. That's that Nasdaq low. So, even though we've had a very sharp drop to the downside, are we still above the previous low? We are. We haven't broken it yet, have we? No. So, when the low does get broken, that's when we can say things have changed. But if we have a look at this here, higher lows through there, higher lows, higher lows, higher lows, and another higher low, that right here, right there, they see that candle there, see how it broke it? That was the first time. But before that, higher lows. Okay, you get the point what I'm trying to say here, right? Another higher low through this. So the market was making these higher lows all the way up. Another higher low, when we broke it, guess what? That's when we started the downward trend. This is your valid reason for you to get worried about the toppers in the markets. But if you're thinking toppers in the markets right now and because of a wide range of other things, well then it's guessing, right? It's guessing. Remember, the economy is not the stock market, right? So if something is happening bad, and you probably realize that yourself now, right? We've had banks go under and the stock market keeps going up. So that's what I wanted to share with you there. And even if we're looking at, say, things like gold and silver, what's silver doing right now? So silver's actually having a bit of a sell-off right now. But what is silver doing? Silver to me is what? It had this strong move up. We've had this drop to the downside, strong move up, a drop to the downside, and now we're still at the moving average coming up. So this could just be right here. This could just be a what? It could just be just a simple retracement in the markets before we get going again. And the same for the gold market through here. Okay, so this is gold as well too. Gold is in a very strong upward trend, right? So look at this here. Lows, higher lows, the same low. It didn't break the low, did it? So this is what can happen sometimes. The market can come down. It'll come down to the exact low, but actually won't break it. And then it'll come back up. It'll create another higher low. Now it's creating another higher low, and we're doing that through there, right? So we may even do something like this, and then have another big move up. So this is what I do, guys. This is the reason why the weekly chart is the most important time frame to look for when trying to utilize what's going on right now, so we can make really good decisions in the markets. Because for far too long, I made the biggest mistake, even when Trump was being elected. If I go back and bring up, say, this chart through here, and I bring up, say, the Dow Jones, even when Trump was being elected back in 2016, right? So when in 2000, it's not going to allow me to go back that far, is it? I have to use the weekly charts. So even back in 2016, like right here, one of the biggest mistakes I was utilizing was utilizing fundamentals, right? Or what I thought was fundamentals. It was really just people's opinions. It wasn't really fundamentals. It was like, yeah, things were supposedly bad, and and you had all these people come out and say the market crashed. And that was one of the biggest mistakes I made through there. And this is where when I'm actually doing my coaching program, and you can apply for it, guys, that first link in the description. My coaching program is all about you're with me every single day, and you'll be able to see what I'm doing in the markets every day. I'll show you what I'm doing in the markets every day, what sort of trades I'm taking, when I'm getting in, when I'm getting out, long-term trades, short-term trades. And plus also I'm there to coach you and help you every single day in the markets there. And plus you're part of a super small, tight, just incredible, like powerful group. It's only a real small group together. It's like less than 20 people there in this small group. And so if you do need some help, guys, and you want some help and you want some guidance, because as you know, there's the system side of things, there's understanding what's going on in the market right now, like what I'm talking to you about right now. There is getting in, there's having the emotional management to let the profits run, when to get out, and all that sort of stuff. And if you want a coach there that's been through 2 decades of these markets to actually to then bring that experience to you to help you fast track your success, then I'm your guy, right? There should be a link in the description there, guys. You can click on that and you can go apply for that. And all I say is just don't go at this alone, because I'm seeing so many people losing hundreds of thousands of dollars right now because they have no idea what they're doing about risk management and so on and so forth. So go apply for that coaching, guys. That's first link, or there should be a link in the description there. So by looking at the actual, even the Dow Jones, right? So we saw what happened here, even with Donald Trump was being elected when? So this up week, this is a weekly bar through here. That up week there was what? When Trump was being elected. So if I remove every single thing that was supposed to that was happening at that time, news, media, he say, they say, and I say, oh look, it's making a low, it's making a higher low, it's making a higher low, and it's breaking past these previous highs. So at that time when Trump was elected, what was the chart telling us? It doesn't matter what I think or what I'm hoping for. If I just simply go, okay, well the market's doing this, the market's much smarter than me, and the market's doing this, so I'm just going to go with the market. You'd be so much more successful just listening to the market and say, market's going an upward trend, let me go with that, right? Because there were so many people at that time that when this market was dropping down through here and this is a weekly chart, right? So this is a couple of months of just doing nothing. Then you'd be able to see that when that happened, people were thinking, that this is a false breakout, the top's in and all that sort of stuff. So if we go and have a look at all these markets, the Dow Jones right now, what is this? Low, these higher lows, and then we could be getting another higher low through here. So we just want to keep this. This is probably one of the most important time frames to you, okay? Because even when you go back to the 08 period, right? Let's go back to, even when you go back to the 08 period, when the market starts to break a significant low, that's when you want to start to be worried about maybe the top is in. But until that happens, look at this here. Lows, higher lows, and higher lows, and another higher low through here. And once we actually break that, that's when you can say the top's in, right? But as you can see, look at this here. From there to there, look at that there. That was what? A 7-8% drop. This point through here was a 7-8% drop. So you do get your big drops in the markets, guys, and it's just a natural rhythm of the markets. And as long as we keep making these higher lows, as long as the market does that, and same for the S&P 500, as you can see, as long as this low stays above this low through here, then the buyers are in control. And this is just part of the natural rhythm of way markets work. And if you see people are really, really sort of freaking out, the market's only really gone down for a couple of months, right? But it's really been going up since like back here, right? Back in, late last year, it's really been going up. We had a few weeks here and then we had another big move, and now we're just gone through this period through here. So if there's something else that's going to form out of these markets, then we'll flow with that at that time. If the market does, for some reason, break below this low through here like this, well, then we know, okay, now we need to be cautious now, because this could turn into a bear market, right? Or we may actually do what? We may actually get a bit of a rally to the upside through here, right? And then maybe we start the rollover through here. So that's the if scenarios. But the most important thing to us, and the most important thing for me, is that I just need to trade with what the market's telling me. I'm not smarter than the market, and the most important thing for me is just to continue listening to the markets and not listen to my fear or the fear media, and therefore I can make much better decisions, because I'm sure you guys know, and if you've been around for a while, that by listening to that fear, it stops you, and you've been so fearful of this drop, and then suddenly by the end of this year, we see this happening in the markets. By the end of this year, we're actually up at 6,000, and then you're like, why was I so worried and so fearful here? So the number one thing, guys, or one of the best things you can do for your trading is look at the weekly time frame to make good decisions and to remove your emotions.